Right when the market looked like it was about to fall off a cliff today, it rebounded resiliently at a specific predictable price target. Now, I want to talk about exactly why I bought 30K worth of LEAPS today on one particular stock, and I added a 50K brand new position to the portfolio. So let's go ahead and jump into it. Why the market fell today. Could it fall further next week potentially? I'm going to go over all the ins and outs, but remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if you take a look at the account, we were down in the 1.3s today. So, the market rebounded resiliently today. But if you do want to see me hit my 8-figure goal in this portfolio and follow along that journey, be sure to be subscribed to the channel by clicking the subscribe button down below if you haven't already. And also, if you get any value out of this video, please give it a thumbs up for me, as I would greatly appreciate that. And I appreciate you being here. So, for transparency, I want to go over the realized gain loss for the current year, okay? I like to do this every Friday. I'll give a monthly report and I'll give a yearly report. As you can see, we're up 427K in mostly options premiums, and I'm not the only one doing it. Obviously, results vary year to year, but let's take a look at Options Trading University. As you can see here in my private mastermind, Options Trading University, we have now 574 clients all winning here, sharing their inspiration. As you can see, Richard sharing his inspiration today, even though the market was down. Okay, we had another client here sharing inspiration. And obviously results vary based off account size and risk tolerance. But if you want access to my Ryan's trades and my LEAPS entries and exits, that'll be at the top of the description down below. Also, I give away free trade ideas on my Instagram, my new X account, okay, and my free newsletter, which are all three of those are down below in the description as well. So be sure to be subscribed to those because they're absolutely free. So let's go ahead and dive straight into it, okay? The shutdown means another missed jobs report this Friday. So because the government shutdown is continuing, data is not coming out. The ADP, or actually the ADP payroll report came out on Wednesday, but the unemployment report, the official unemployment report, did not come out today because of the government shutdown. The markets do not like uncertainty. They like data. The market likes to predict where the market is going in the future based off current data. And because that data did not come in today, we saw a major spike in volatility, okay? We saw the market come down quite a bit, and I'll talk about that. Next week, we have more volatility, right? Because core CPI data is supposed to come in on Thursday. Hopefully that comes out, right? Because if that doesn't, we're definitely going to see some type of volatility event in the markets. But I'm hoping that core CPI data, they at least release that data so that we could see where inflation stands, which will influence the rate cuts. Okay, now if we take a look at the CME FedWatch tool, which shows you the odds of a rate cut, okay, for December, these odds here from my last video were at 62.5%. They've gone quite higher. In fact, this morning, these odds were up at 72% of a rate cut in December, even though Jerome Powell indicated that there probably won't be a rate cut. So these odds are still on the table. It's fluctuating higher. So we might even see a rate cut in December, which would be extremely bullish for the market. But either way, one is being priced in January, okay? So, just keep a close eye on that. But again, with rate cuts, that's bullish for the markets because businesses and consumers can borrow at cheaper rates, fueling liquidity in the markets, fueling basically people to chase assets, okay? So, rate cuts are on the way, so I'm still very bullish, even though today we saw a pretty decent drawdown here on QQQ. I was pleasantly surprised. At one point, we were down about 6.2% from all-time highs, okay? Now, I was expecting us to break this 598 area and actually head down all the way to potentially 571 or even 588, okay, for a 7 to 10% pullback. Now, because of how we traded today, we bounced off this trend line that has been holding ever since the tariffs crash, okay? It's been bouncing off that here, as you can see right here, okay? Bounced off there September 3rd, all right? And for a third time here, potentially that holds right on Monday, okay? So what I'm seeing is that the market is very, very resilient here, a lot more resilient than I expected. Today, I really thought the market was just gonna roll over and it didn't, okay? So with that being said, because we have this nice green candlestick here, sellers were quickly met with buyers. As you can see, this volume candle bar, this volume stick right here was green. We had a lot of buyers stepping in at this point. So it seems like every dip is being purchased. So with this type of resilience in the market, I told my group, I said, hey, if VIX falls below 20 today, we're most likely going to be higher on Monday, all right? Unless some crazy news comes out on the weekend, which could definitely happen. The odds are saying that we are probably headed higher from here, okay? So my expectation is on Monday, I was expecting a flush, but if no news comes in on the weekend, okay, I think that most likely we head higher from here, and that was just a quick dip to be purchased. Now, VIX, which is the fear and volatility index of the S&P 500, tells me exactly how much cash I should have on the sidelines versus how much cash I should have invested. And today, we spiked all the way up to 22.72, which we haven't seen since October 17th. So this was a perfect area to deploy cash. I deployed a lot of cash today, brought my cash levels down from close to 18% all the way down to 12%, okay, because I am selling expensive options. So let's take a look at the VIX cash allocation levels. As you can see, we are now trading between VIX 15 and 20, right below this, so there's still slight fear in the market. And essentially, I could have 20 to 25% cash on the sidelines. I brought my cash when we were here all the way down to 12%. But because I'm not getting assigned on $200,000 worth of Robinhood shares, my cash levels are going to be somewhere above 26% for Monday. So I'm right in line with these VIX cash allocation levels, and things are looking pretty decent here. So with the VIX being here and then going below 20 today, I think that was kind of the spike. That was it. And as you can see, every previous spike is met with fear subsiding. Okay, so that's kind of what I expect, is to fear to subside next week. Probably going into the core CPI data on Wednesday. So let's talk about the stocks that I actually added a few new stocks here. So the first one is Taiwan Semiconductor. Now, this is a decent sized position I put on because this was my low risk position. This was one to where I said, hey, this is going to be a safer hold for the portfolio. PE ratios are low, okay? And I want to take less risk since we are near all-time highs. And if we take a look at the PE ratio, trading at 29 PE, okay, in the AI space, which is one of the lowest PEs you'll see in this particular sector, okay? Also, the thing that I like about Taiwan Semiconductor is their profit margins are very big, 45% margins last quarter, okay? And their cash on hand is 81 billion versus their debt is 31 billion. So they could pay off their debts like 3 times over. So I really like this company, okay? And this is a new one in the portfolio, and I saw opportunity here. So as you can see, you know, off the all-time highs, it kind of fell, and we're going to go from all-time highs. Today, it was down at one point 11% from all-time highs, bounced right off that 50-day moving average, right? And I said, hey, this is a good chance. It's at the lower Bollinger Band. It's a good time to sell some cash secured puts. So that's what we did. Let's go into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary, but if you take a look at the account, we put on 55K worth of TSM cash secured puts. So I sold 2 November 28th, 275 puts to collect over $1,000 in premium. So if I were to put on this trade again, like if I were to put on one tomorrow, I'd probably just go out to December, 28 days from now, and I would sell the 275s again, okay? I really like that strike price because, okay, 275, I'd pick up $720 in premium, and that's a 32 delta, meaning it has a 32% chance of going below that by expiration. And in that case, I would be forced to buy 100 shares, which would cost me $27,500, right? But I get paid a potential ROI of 2.8% in 28 days, right? Obviously, results vary based off where the stock's at. These numbers fluctuate, but I really like that price. And if we go back to the chart, okay, 275 is all the way down. We could draw it here, okay, all the way down here, 275, okay? So with that being said, all right, from today's prices, that would be about a 4% discount From all-time highs, that would be about a 12.3% discount. So I like the odds there. I wouldn't mind getting assigned at 275 and then riding the stock back up, okay? But it looks like the stock is already recovering. So that's one new position I added to the portfolio. More of a safer position, a safer play for me. Good fundamentals here. We want to search for stocks with quality fundamentals, upward trending charts, right? And good premiums for the options, because that's what I do is I collect premium selling options, okay? So that's the first one. The second one, Robinhood, okay? I had a 194K cash secured put position that was at the 130 strike. Today, I was like, you know what? I'm going to get assigned. The stock was at 121. I'm getting assigned at 130. Then it went all the way back up to 132. Oh, I guess I'm not getting assigned. And then it went back down to 128. Said I'm getting assigned again. And of course, the market makers closed this thing at 130.36. So I did not get assigned, but I did purchase LEAPS call options because I was expecting a rebound in Robinhood. Okay, so yesterday I got in a little bit early here, but it met the criteria. It was near the lower Bollinger Band, so I got in right here, okay, into some LEAPS call options. Now, let's go to the portfolio and I'll show you exactly what I did. So we're gonna go to the positions. As you could see, I have the 130s, 128s, 130s, 130s. These are all gonna get called away, or actually expire worthless. They already are. To collect about, I think I'm collecting around, $3,000-$4,000 there. Okay, but I did purchase 30K worth of 120 LEAPS call options on Robinhood. They're currently up about 1.3%. I'm planning on holding these to make 10 to 20% in the next week or two. Okay, so why did I do this? Well, this is one of my favorite stocks, and every time this thing goes down near the lower Bollinger Band, which shows you, okay, 95% of the time the stock is going to stay within the bands. And when it goes outside of the bands, like right here, that's an outlier move, a 5% outlier move. Usually it doesn't happen. 95% of the time it stays within the bands. But usually the stock kind of sucks back in the Bollinger Band. So that's what we saw today. It sucked back in and it's probably headed higher from here. So I play the LEAPS like short-term call options. I buy the time so that if I'm wrong, okay, I have a year and a half to be right. But if I make 10 to 20% in 7 days or less, then I take it, okay? 20 to 40% in 30 days or less, I take it. So that's what we're gonna do here. And then we're probably gonna add some more cash secured puts next week, since I will be getting this 194K back into my cash account. So that's Robinhood. Very resilient stock here. Wonderful stock to play. Their earnings were amazing. And, what can I say, right? Now, if we look at their earnings presentation, I want to quickly go over a couple things here. So their Robinhood Gold subscribers have grown quarter over quarter 14.5%, okay, to 3.88 million Gold subscribers. That is recurring revenue for this brokerage firm, okay? Most brokerages, Charles Schwab, Fidelity, they don't have recurring revenue like this. So this is massive for Robinhood. Total platform assets jumped to $333 billion, which is a new record. 119% growth year over year, okay? This is exactly what we want to see. Revenues have grown 100% year over year. So this stock crushed earnings expectations, yet it fell down because the overall market took it down. So I wanted to jump in on that opportunity, buy LEAPS, and I was hoping on getting assigned at 130 on 194K worth of shares, but I didn't. So I'll be selling some more cash secured puts on Monday. But that is exactly how they did. So let's go ahead and move into the third stock that I added, which is IREN. Okay, now IREN came off of amazing earnings. Okay, it's officially a positive earnings stock. 4 quarters of positive earnings, which means it has a positive PE ratio. So if you look at the PE ratio, if we go to the chart on TradingView, okay, you're going to see that the PE ratio today is 102. This is amazing, right? Usually it's very hard to find stocks that, are just going profitable and having those 4 quarters. So shout out to my group, because there was a few members in here that were talking about this stock and brought it on my radar, because I'm very strict with only selling cash secured puts on positive earnings companies, upward trending charts, and good premiums. IREN meets all three of those, and this may be a very fun one to trade for the foreseeable future. Net margins, 94%. Okay, they have a lot of cash on hand, and they're in a very unique space, Bitcoin mining, but they also now do AI cloud infrastructure. So because they optimize their business to have the lowest cost of electricity to mine Bitcoin, they also have low costs, right? To run, they have thousands, maybe even hundreds of thousands of NVIDIA chips that now they rent out GPU space, and they just made a deal with Microsoft. So if we take a look at their earnings presentation, you could see that, 240 million in revenue, okay? Net income, 385 million. EBITDA, Microsoft AI cloud contract worth $9.7 billion with a 5-year average term, 20% prepayment, okay? And they're expanding their 140,000 GPU expansion by the end of 2026, okay? This is exactly what we want to see from a company like this. So amazing earnings, very unique story being Bitcoin miner and AI cloud compute. It's just an amazing story. So this type of company is one that we want in the portfolio. Now, because it's a newer company, I tend to start off small. So wonderful pullback today, good earnings, but the stock pulled back because of the market going down, right? The market tends to bring everything down with it. And the stock went all the way down to 58. Now, during that moment this morning, okay, I put in my group, Options Trading University, I said, hey, I'm starting my position. So let's go into the account and I'll show you exactly what I did. Now, what I did was we sold 10 52 puts, okay, to collect about 26.20 in premium. Now, why did I go out only 15 days? Well, there was a lot of premium at those options. And if we look at the overall position, okay, this is a $52,000 cash secured put position. So I basically went out 14 days, and my 52 puts at the time were yielding around 5%. So I'm looking for a 10% ROI in monthly premiums on this stock because it's a higher risk play. It's very volatile. This thing swings around. So I want to make sure that I'm getting compensated for the risk that I'm taking. Okay, so I sold the 52s. I think at the time it was like a 26 delta to collect a potential 5% ROI in 14 days. So once these expire, I'll do another 5% ROI, potential ROI type put, right? So that's the ones I sold. If I went out, to the end of the month or 30 days, I'd probably go out to, let's see, the 10%er is going to be the 29 delta at the 55 strike. So I'd probably, I'd sell the 55 strike, collect 500 for a potential 10% ROI, okay? Now, results vary there. And if the stock does fall below 55, I'd be forced to buy 100 shares at 55, which would cost me $5,500, okay? So that is the risk there, but I really like this position for the portfolio. I'm already up 23% in premium, and that is going to be my new play that I'm very excited to continue wheeling in this portfolio. In fact, I may even grow this position maybe upwards of 60, 80, even 100K if the stock continues doing what I like it to do, which is going up. So if you enjoyed this video, please give it a thumbs up. Looking forward to the next update, and I'll see you in the next one. Take care.